Welcome to the Investing Podcast, presented by Tusk Media. Now, for your early morning look at financial news and activity in audio and video form, here's the Morning Market Mimosa.
Good morning, everybody. Welcome back to the Investing Podcast, presented as always by Tusk Media. I am Andrew Hall. This is your Morning Market Mimosa. Joining me as always in the morning, Mr. Ben Nye. Ben, what's up?
Good to be here again.
Glad to have you, man. End of the week, so we're going to be here. Sam and I are going to finally get together for lunch. We've yet to have Sam on, and we have a really special wardrobe surprise for you guys.
Well, his last appearance was the laughing.
That was such a debacle. Sam brought himself to tears with his own jokes last Friday at the Intern Awards. It was rich. If you haven't watched that, check it out on YouTube. All our stuff's there. Go to YouTube, search Tusk Media. While you're there, hit subscribe. We're trying to get to 100 subscribers because then we can have our custom YouTube channel. So you can be like youtube.com/TuskMedia as opposed to a bunch of numbers and all that kind of stuff. So do that no matter how you're listening. Hit subscribe. Lastly, please leave us a 5-star review on iTunes. You and I have talked about this, so you know this, and if you're a frequent listener, you know this. But iTunes puts a disproportionate weighting on 5-star reviews. It's a huge deal. Our download numbers continue to creep up on a daily basis, but our ranking creeps down because we're no longer just bringing in tons of 5 stars. And admittedly, we were front-loaded because we were all able to leave 5-star reviews, which was really nice. But we're kind of hovering around 55 or so on the audio, which is honestly strong, but we need momentum on 5-star reviews to climb up those charts so more people can find us. So do that. Helps us a ton. Let's talk a little bit about the market. We're going to have a quick update this morning. Futures, Dow futures are up 4 basis points, S&P futures up 3, NASDAQ up 4, gold down about 1/3%, oil up about 1/10% to 43.54. I know you were just sifting through kind of a bevy of data that came out, and it's not that great.
It's not good, and literally we were just coming over here, and I was just scratching these numbers down. Retail sales and PPI, which is Producers Price Index, came out, and they almost across the board missed estimates and were lower than the prior month's actual result. So for example, if we just look at retail sales, we're talking flat. Market Street was looking for up 0.4. And if we strip out oil and gas, auto and gas, we're talking down 1/10. Street was looking for 0.3. It was up 0.7 last time, which is kind of odd because Kohl's and Macy's.
Yeah, we've just been talking about how great this has been.
So who knows with these high frequency data points, but it's not universally good. And then you move on to the PPI. Oil obviously plays a role there, but PPI overall down 0.4 month over month. Estimate was up 1/10. And then again, if you strip out food, energy, trade, you're still talking flat. Street was looking for up 0.2. So things not looking good. U.S. dollar weakening on that. The yen down to 101.33 from 102 just prior to the number. Euro spiking up to 112.07. It was 111.55 right before that. Gold obviously up about 1% now from where it was.
Yeah, and I was going to say, I'm not texting here, but I wrote these notes down right before you got that data, and right before we walked over here. And just a second ago, I talked about futures being up. Right now, Dow futures are down 7 bips, so they've moved 11 bips. They were up 4 just a little bit ago. S&P futures down 7. They were up 3 just a few minutes ago. NASDAQ futures down 4. They were up 4 just a few minutes ago. So already we're starting to see the market kind of react to these.
But with any of this data, as as it's bad data, then people say, well, maybe the Fed's not going to hike.
Exactly. Yeah.
So there's silver lining, I guess you can say. But
it's kind of an interesting spot because as we've talked about, the big driver for the markets, it seems like everything is just interest rates, and you tend to expect an interest rate to come when the economy is looking more stable and more strong, but people can read into things like this and say, oh, well, that means we're not going to get a rate hike, which is presumably good for investors, for business, things like that, as we continue to watch that. Last thing we've got for this morning, little trivia type game. We've got Airgain is IPOing. IPO at $8 a share. Ticker is going to be AIRG, so AIRG. And I'm going to read to you what Airgain says they are, kind of their introductory sentence. You know, if we were to say, what is Tusk Media, we would say the worldwide leader in entertainment. That's what most people consider us to be. Here is what Airgain says, and I want you to tell me if you understand what any of these things mean. Airgain is the de facto industry standard for throughput verification of 802.11 in home wireless systems.
Wow. The de facto, I was lost at de facto. I mean, it's just the only solution, I guess.
Throughput is also a weird word
Yeah.
because it looks like a typo. You think they meant to say throughout. It looks really weird on paper. I was like, that can't be right. I even did the copy and paste into a Word document. It's a real word.
And O is right next to P on the keyboard.
Yeah,
So-
yeah. So you're like, God, they just typed something wrong. I still wouldn't understand that sentence if it was throughout, but throughput. So they're the leader in that throughput of 802.11.
It's got to protect those IP addresses. or
Yeah.
something.
So I'm gonna make a prediction, knowing that they're the de facto leader in that space. It's gonna IPO at $8. It's gonna take off. Yeah, you heard it here first. That's market analysis. Airgain. We're the leading investing podcast talking about Airgain this morning. So y'all have a great day. We'll be back in a little bit with Sam. Ben, thanks for being here. Have a great weekend, man.
Thanks, you too.
Thanks.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.